reasonable ways to short stocks. You were talking about this with somebody.
I was.
This is one of those instances that I'm kind of happy about, because it's like, wow, I really do have my finger on the pulse of these markets a lot of times, where I wrote this article last week for our small exchange community members about shorting stocks. And on Monday, it's like, oh, these stocks are falling. Like, good time to be looking at shorting stocks. But it's a double-edged sword, because it's like, well, now the stock market is 1 or 2% lower than it was on Friday. And now we kind of missed it, but we didn't actually miss it. And we'll talk about how we can employ some strategies to short stocks without having the idea that I missed it or I've got too much risk if I'm shorting stocks. A lot of stuff that with our strategies this week we're working towards. But if you want strategies like this every week and a ton of data, and we're still sending out, I'm looking at.
And that's not all, friends.
Intern Glenn out here is literally, as we speak.
Can we just call him Glenn? Jeez,
that's his Christian name. His parents gave him that name, Intern Glenn. That's what they named him.
Yeah, right. Unbelievable. This kid is never going to have to work a day in his life. The harassment suit he's going to file after he is done in September, he's going to have millions. I'm going to be working for Glenn.
It's pretty bad. I also, on my way in this morning, I gave him a little tickle. I was like, Monday morning, and I tickled him. And I think that's going to be part of the lawsuit as well. I don't think that's going to go over.
And it's so smart now that you got it in video format. That's forever. Well done.
Glenn is right across from me. He's outside of this room. He's putting hats in mailers right now to go out to people who sign up to be part of our community, and then hit me up at frank@tastytrade.com. But you got to join the community first, community.thesmallexchange.com. We're giving out a ton of data, a ton of strategies, and you get reduced fees on every trade in the small exchange futures. It's a beautiful community that we're continuing to build out. And this week, Pete, we talked about reasonable ways to short stocks. And I looked at something that I think you and I think of as being simple, like a simple idea where it's like, oh, you could sell the stock market and then hedge it in one of the stock sectors. But I brought this on with Liz and Jenny last week, and I talked about it with some other different trading personnel. They're really nice. They're really fun.
I know. They're your new favorites. Liz, Jenny.
Great co-host. Probably my favorite host of any program.
Good. I hope so.
They loved this idea, and a lot of people on Twitter also liked this idea, which is like SM75, the small stocks futures, has technology, energy, financial, industrial, and material stocks inside of it.
Can I ask you one quick question, though?
Yeah.
Just, never mind.
This will be good. No. Come on. This is going to be just a real zinger. I can tell. What do you got?
No, I thought you made a mistake, but you didn't. I thought I make a mistake every time I build a set of slides. You had examples in September 17th, 2021.
Yeah. Yeah, that's the expiration, the options expiration for XLK, XLE,
right.
XLF, XLI.
When I just saw the date and I thought you were ahead of yourself by a month, but then I realized what you were saying. It was the set expiration.
No. Very few mistakes here for Frank. Our intern actually tried to get me as well. He was like, it's saying here that underhedge isn't a word. And it was like doing the red underline in there. And I was like, underhedge is a new word that we made, and we're going to use it. Absolutely. Everybody's trying to stump Frank, but few can actually do it. But we have a really intriguing way to short stocks, which is to go short the SM75. And that's like, okay, I've got broad short equity exposure, which works really well on a day like today, right? We're like,
well, not right now but we're talking about two-sided markets. You're getting great bounces and everything. If you're looking this is the perfect time to look at these strategies.
That's it. Yeah, absolutely. We got the bounce back here on Monday afternoon. So you can look at selling that SM75, which just gives you broad equity short exposure in there. And then you can underhedge it with one of these 5 strategies. And you can pick for yourself like, oh, I think that technology is, if the stock market crashes, that's going to be the most stable one. Right. So I'll hedge in that sector, or I'll hedge in energy because it's the most beat up. And so I'll go in there to hedge or financials or industrials or materials. And it's really nice to kind of choose your own adventure in here. You're getting that short equity exposure near the highs here. You're getting that, like, I think the stock market might crash a little bit in the next couple of days to weeks, and you're offsetting it. You're hedging it and extending duration, right, Pete, with these sector options trades.
Yeah, absolutely. And you know what? That's exactly what we're doing. Different kind of trade. Can you take the static long short of the position, 50-50 bet? Absolutely. But if we were looking at, you and I have talked about pairs trades, and sometimes in traditional futures, they're complex. And this is a pairs trade, but it's just a very simple one of adding some cost basis reduction to a bias you have in a very simple fashion and in a very capitally efficient way. So, it's when you do this, Frankie, and I like that you didn't go to individual stocks, because that is its own. I think there's the disconnect. I mean, you know what? Equity index by nature is a basket of stocks representing a certain segment of the market. Let's use the corresponding piece, and let's use one of these ETFs to kind of pick and choose. Because, we all have a directional bias. Now we're adding a little nuance bias, but that additional, and it's really not complexity, but we can call it that additional step, yields us a really nice dividend in terms of premium.
Well, that's exactly right. Because the idea here is that, like, if I sold the stock market today, the average historical statistics would tell me that tomorrow it is more likely than not that the stock market moves a little bit higher. Now, of course, everybody knows cyclicality dictates that the stock market will move lower at some point. But in the short term, there's this relationship. We usually round it off to 55-45 in favor of the stock market moving higher on any given day. And so selling, the 47 put in XLE offsets a little bit of that short-term upward drift. Maybe I get 70 or 80 cents for that short put, Pete. I can withstand now a day or two of SM75 inching higher, potentially even a couple of weeks with that premium. And then if it does crash, I am underhedged because that XLE is a smaller product than SM75. And the same with XLK and XLI and XLB, larger products, but that's why I've got some spreads in there to underhedge.
Right. And with the expirations on September 17th, and I don't know if you pointed that out on the slide anywhere, you know what? They're going to buffer your position, but they're not going to turn out to be your worst enemy. So
exactly right. Because the last thing you want is you're ready to get short stocks. It's August 16th.
And your hedge consumes. When you're right, you're wrong. And that's when you overhedge and your hedge consumes your directional assumption. So
that's exactly right. We always talk, that's the worst thing is, like, I'm short stocks. That's my idea. And then tomorrow or next week, the stock market sells off and you're losing money somehow. And that's why these are all under hedges, but decent hedges for, like we talk about, getting rid of that upward drift that goes against us. And I know a lot of traders get this, Pete, and you and I have been, have been vulnerable to this as well in the past, where it's like new high in the stock market, you go in there and you're like, I'll get some shorts on because this stock market's going to reverse at some point. And it's this like slow bleed where it's like tomorrow the stock market's up 0.25%. Wednesday, the stock market's up 0.5 percentage point. It's not killing you. It's not forcing you out of that position, but it's just like, man, I lose $50. I lose $30. I lose another 50. And it stinks. And these options here, you can pick the sector you're most confident in to commit that hedge in there and feel good about being underhedged if that stock market does finally fall there. Now, this is something that we don't normally look at on this segment, where we kick off the week looking at some hot statistics that go to our community members in the newsletter. But I wanted to bring this up. This is just simply where small markets are relative to their 3-month highs and lows. What's really intriguing to me when you take a step back here, Pete, and you look at these asset classes is, one, the stock market is very close to those highs, and two, markets that are highly correlated with the stock market, crude oil and yields there, are middle of the range or on the lower end of the range. And I was just talking about this on Twitter today, and I think it's still a pretty good opportunity to jump on with the bounce back in equities. Interest rates versus stocks, man. We talk about this maybe once a month because that spread widens out. I think this is a good place to maybe long some interest rates, or even with crude oil getting especially hammered this morning, maybe looking at some short stocks versus other futures in a pairs trade, dissimilar to our longer term hedged look at short equities in the last slide.
Yeah, what I like is I again, great piece of research, guys, for members, community members. It's a different way to look at this slide, this particular page of the research, and I like that. That's a good piece of connective tissue. I like the way you did that. It's a great snapshot. If you want to know where we are and you haven't been following us closely, that's the takeaway. But you actually looked at it in a different way, which speaks to how valuable, this type of information is. So it's a really nice piece of context by you there. Glenn, tell Glenn, thumbs up. Nice job.
Glenn had nothing to do. No, this is all Glenn's brilliant ideas. A 19-year-old intern, very, very savvy with the data analytics. But is there anything, the only other thing that kind of piques my interest is metals, a little bit of a bounce back, but still very near their lows. And on a day like today, Pete, can't really pick a direction. Is there anything that you would assign to metals, be it a spread trade or an outright trade on its own, if this volatility that we've seen to kick off the week is here to stay?
I don't know. If you want to, are you Texas hedging if you're long metals and short the dollar up here? I don't really. Well,
so actually, that's a great question, because I would, any other environment, I would say yes, like just right off the bat, right?
Right, and that's what we're both thinking the same way. Traditionally, going back 10 years, yes, we're living in a slightly different world now. So I don't know.
What's interesting though is over the last 12 to 18 months, I would actually contend that U.S. dollar and metals have been kind of they've both been kind of a fear trade, I mean, when fear enters the market, volatility enters equities. Gold, silver, and U.S. dollars last year moved huge, to new highs. And we're seeing that U.S. dollar already kind of get back to those highs, and metals lagging a little bit. And Pete, if I told you this morning that stocks were off a percentage point or two, oil was off 5%, where would you guess? I would think you would guess gold and silver is up a little bit, right?
Yes.
And so maybe there is something to this long spree short SFX trade. I actually kind of like that there. I at least like a little bit of this long metals exposure, especially if I'm trying to catch the bounce today in a long yield trade or a long crude oil trade. I like the metal exposure there, a little bit of a fear trade getting long as well. Now, Pete, last segment here on Small Stakes for Monday afternoon. This is the best one. This is your favorite, everybody's favorite, ranking the pairs of the week. We got 3 pairs for Pete, employing short stocks, short dollars, and more short stocks. First one that we're looking at is what we looked at in that first slide, but specific to energy. And I bring it up because it's probably the best value play if you were going to get short SM75 and you were going to get long any sector. You can see here from that chart that energy has been a pretty weak one the last few years, but especially this year, also giving up ground. I would look at that 1 SM75 to 1 naked option in XLE there. You could also do, if you want to do the 100 shares in there, that's a pretty static pair, but we like the option in there just to give you some of that theta and everything else. Second one here, Pete, looking at short dollars, short pounds. This pound, showing that it can sell off a little bit last week, but not getting back to those lows like the euro and like the yen. And with the dollars hanging on to these highs, I don't mind looking at that short US dollar, short British pound trade as well, looking at a 1 SFX to 10 short deltas in 6B or 1 short M6B contract. Last one, SMO 2 stocks. This is one that is getting it's a little bit of a Wild West trade, but it's pretty intriguing, especially with today's movement, looking at a potential long in SMO against a short in SM75, just under the idea of they're both risk on trades. If there's positive sentiment in the market, you'd expect crude oil and stocks to be moving higher together. If there's negative sentiment like we're seeing here on Monday afternoon, both down, but crude oil getting smacked around way worse than stocks. Looking at long one SMO versus short one SM75. Go ahead, rank them.
SFX and 6B is number one there. I think it's interesting. Sterling is having a hard time breaking versus the other currencies. And remember, this is always a long, short pair straight because the dollar index is the inverse of the currency pairs. So I really like that trade. I like, adding, taking the
long
the
pound
piece
out of it.
Yeah, sorry, the long British pound out of it. I think that's great. The SMO SM75 is out of the box. I don't see the correlation, but the extreme is interesting. I get your logic. I just don't see. I feel if that pair pays me, I don't know. And you don't always need to know a reason why, but I'm not quite sure on that one. And the small 75 XLE is a trade we continue to like. And to an extent, Frankie, it's almost the same kind of trade a little bit.
Yeah, it is with the energy stocks there versus the energy itself. It's kind of a matter of degrees. Of course, the XLE is probably going to be higher correlation. So this is what I would say is I like the short SM75 long XLE trade for like something I could hold for days or weeks there. But you're right. The crude oil correlation isn't that strong with stocks, but I do like it for what we're getting today, where it's like SMO this morning is down $3, SM75 is down $1.25, looking for 50 cents in that spread trade, something that's short term, I think is worthwhile there. But yeah, not something I would look at taking through the close, SMO to SM75, but a pretty decent scalp.
Yeah, it's an aggressive scalp. You're right. It's an aggressive intraday scalp. Absolutely.
Very cool. That'll do it here for small stakes. Thanks so much, Pete, for joining me here on Monday afternoon, covering all the bases, all the asset classes. We're going to jump into splash. We're going to splash into futures. Sorry, we don't jump into them. Splash into futures coming up next. A lot of trades to be done here. Markets moving around like crazy. We're going to get you everything, spreads, outrights, everything that you could imagine in the next segment. Thanks for watching. Hang out, everybody.